Good afternoon, everyone. Christian here. Today is Friday, March the 11th, 2016. We'll look at a couple of charts today, starting off with the Dow Jones Industrial Average 6-month daily chart. This particular chart was, I think, let's see, 1, 2, 3, 4, 5. This day here, last week, I told you I expected markets to continue to move higher. You could have a day or two to the downside, but as long as it respected these moving averages, the short-term moving averages, the 10 period and the 20 period, there's no reason to attempt to sell this whatsoever, and not until you get it closed below that 20 period moving average do you even want to consider taking a bearish perspective. Right now you're in a bullish uptrend. You're going to continue to respect that. Also pointed out that your slow stotch is up there above the 80 line and just staying up there, and it will continue to do so. The market will continue to move higher until you start to get down like this. You break down below it again. And you look at some other charts, you'll find that in some certain cases it's actually pulled back down and then bounced back up in there and kept holding it again. So this is just a very bullish market, and I expect next week will be the same. The only caveat being next week we have the wild card of the Fed. So right now the markets are not expecting the Fed to actually come out and raise rates in this meeting, and so if they did, you would see a response by the markets to that surprise. But having said that, I don't actually expect we will see a rate hike, but not at least right now. The main thing is I can expect this to continue to test this previous high. That's going to be true also for the Dow. For the Dow, the Nasdaq, the S&P, they're all in lockstep right now. So that's the most important thing. Notice also your 200 period moving average right here, this red line, faint red line right here. Okay, you just went right through it. That's important to take note of. Again, you are not seeing massive resistance. You are seeing, like intraday, the first time you get close to a trend line, you might pull away from it, but it's not enough to break it down. Look at the 50 period moving average right here. You come up to it, you bounce away from it, you go right back through it, you hold support at it, and you're gone. Okay, same thing here. It comes up to it, and we start to shy away from it, come back, bounce through it. All right, this is the same thing. It's a very bullish condition, not bearish at all. Okay, now we're going to take a quick look at the Wilshire 5000, and this is a weekly chart. Each one of the counts represents 1 week of trading activity, and this is a 1-year chart, I believe. I posted a chart. This is a blown-up version of it, but I posted this chart earlier on the Facebook page. So if you follow us on Facebook, you've either already seen this or you should check it out. It shows a very important detail about the market that we're in right now, and I think that we're actually in a very bullish condition based on this chart. So be sure to check it out. I'm looking at the Wilshire 5000 because I want to see the overall U.S. market. I don't want to see one segment of it, like the technology or the Dow or the or the Russell. I want to see the whole thing. So in this particular chart here, like I said, this is 1 week trading activity, and I think we're going to keep pressing higher here. However, eventually you're going to get a pullback, right? We all expect that. And that pullback, what's really going to matter is whether or not you can take out this level here. And by take it out, I mean actually close below it, right? You see it close right here, pulling down to it, all right, and bouncing off of it is not what I'm talking about. I'm just talking about closing down below it and finding resistance at it. That's going to be what's going to matter down here at the 200 period moving average. Okay, again, longer term chart here, and so this is going to be the difference. If you look back at the 2008 time period, you had the pullback right to the 200 period moving average, and then you bounced off it a couple times, and then you come over here and you test that 50 period moving average, and then you go back down and you broke through it, and then you found resistance at it, and it went into the 2008 time period. That's a similar situation happened. It was 2014. If you go back and look at it, you'll see that we also clear this up a little bit. We also pulled back down to that time period, right, to that moving average, bounced off it a couple times, and then rallied up and then pulled back and then stopped short and reversed and kept on going in the bullish uptrend. I think it was 2014. You can go check it out. Anyway, this particular situation we see right now is very similar. The only difference being you're either in a great oversold bull buying opportunity or the beginning of what will turn out to be a bear market. Right now, I don't see a fundamental reason for the bear market. I mean, back in 2008, we had the Lehman Brothers situation and all that pulled us down. People were talking about oil low prices of oil, things like that being a catalyst, but now that's been alleviated. So what do we really have? And when I look at the markets fundamentally, I see they're improving. I mean, not hugely, but they are slightly improving, moving in the right direction. So any kind of a pullback in the future weeks ahead, I'll be looking still on a bullish perspective. Okay, just want to share it with you. God bless, take care, enjoy your weekend, and I'll see you in the next one.